Real estate, the sacred cow of investment myths. Everyone's been led to believe owning property is the golden ticket to financial nirvana. But here's the uncomfortable truth. Most people aren't investing, they're just buying into a dream sold by glossy brochures and suave agents. Investment requires a strategy, not just a mortgage. Owning a home and claiming you're an investor, that's like putting on a lab coat and calling yourself a scientist. The psychological lure is inescapable. A tangible asset feels safe, deceptively so, but the brain confuses owning with investing. The difference lies in cash flow and appreciation, not emotional security. When the curtains fall, most homebuyers don't realize they're playing a different game. The gap between perception and reality is vast, and it's time to unveil the mechanics. Appreciate the mechanics of a genuine investment. It involves risk, returns, and a clear understanding of market dynamics. Yet when buying property, emotions lead. The brain clings to ownership as proof of success. The idea, I own, therefore I prosper. But what if that house doesn't yield profit? What if it becomes a financial vacuum? The sweet allure of real estate isn't about bricks, it's about perceived stability. The brain loves stability, even if it's an illusion. Buying property is like adopting a pet thinking it's an ATM. Without the right approach, it becomes a cost center, not an income generator. The blind spot is enormous, and real investment remains elusive. The widespread misconception is rooted in flawed logic. The brain equates mortgage payments with investing, yet they're merely expenses. Monthly bills that eat into your income, not grow it. The trap is subtle yet powerful. On paper, property seems a goldmine. But the paper doesn't show hidden costs, taxes, and repairs. The mental glitch is seeing a home as an asset, ignoring it's often a liability. The emotional high from buying clouds judgment. The euphoria blocks critical analysis. Real investment demands more than just ownership. It requires returns that exceed costs. Most properties fail this test. This is real estate's well-kept secret. The illusion of property as a guaranteed wealth generator is pervasive. It hides behind societal norms and financial misconceptions. The brain loves fitting in, following the crowd. Buying property feels like joining an exclusive club, but membership comes at a price. The hidden fees are many, and the returns often mediocre. The mental shift from buying a home to investing in property requires clarity. Yet clarity is what most lack. The real estate market isn't a lottery. It's a complex system requiring insight, strategy, and patience. The mismatch between perception and effort is vast. Real estate isn't a get-rich-quick scheme. It's a long game that most aren't prepared for. The final nail in the coffin of real estate misconceptions is maintenance. A true investment should appreciate without constant financial input. Yet houses demand upkeep, siphoning funds. The brain overlooks these continual costs, blinded by property pride. It's like feeding a slot machine, hoping for a payout. But each maintenance bill chips away at potential returns. The illusion of value appreciation is often just inflation catching up. Real estate's allure is its tangibility, but tangible doesn't equal profitable. The mental block of seeing property solely as an investment is stubborn. Real insight requires recognizing when an asset is really a liability. Most buyers never cross this threshold. The gap between dream and reality remains wide. Let's talk numbers, the unvarnished truth. Over a 30-year mortgage, you'll pay nearly double the home's sticker price. Interest isn't your friend. It's the silent partner siphoning profits. Factor in property taxes, insurance, and maintenance. Suddenly, your nest egg looks more like a money pit. Homes appreciate at about 3% annually. Stocks, historically around 7–10%. It's like choosing a tricycle for a race. Yet the brain clings to real estate's perceived safety. The numbers, stark and unforgiving, tell a different story. The true cost of ownership is miscalculated. And this oversight costs dearly over a lifetime. The allure of ownership blinds to the financial blade. When you strip away the illusion, it's not pretty. Reframe time. That dream home might be a nightmare in disguise. A true investment is measured by net gains, not emotional satisfaction. People say real estate always appreciates. Yet inflation and market fluctuations eat away at perceived gains. The brain is adept at ignoring opportunity cost. Every dollar sunk into a home is a dollar not compounding elsewhere. This is the trap. It's not just about property gains. It's about lost potential from more lucrative ventures. We must shatter the illusion of inevitable property profits. The mental pivot, realizing that not all assets are created equal. Real estate is a slow mover. The stock market, though volatile, offers agility and growth. Time to question deeply held beliefs and consider the alternatives. Lifetime cost analysis is a sobering exercise. A property valued at $300,000 today might cost over $600,000 after interest and expenses. Meanwhile, a diversified portfolio could potentially double or triple. It's not just about cash outlay, it's about growth potential. The numbers reveal the painful truth. Real estate stability often masquerades as profitability. The comforting lie we tell ourselves, I'm building equity, but at what true cost? The brain's bias towards physical assets ignores their sluggish appreciation. We glorify ownership without understanding its financial implications. The question arises, is this the best path to wealth? Or are we simply following a comforting narrative? Time for a financial reckoning. Let's flip the script. What if we viewed homes as consumption, not investment? Consider them lifestyle choices, not wealth generators. This shift changes everything. The brain wrestles with this concept. We are conditioned to see property through investment lenses, but homes are like cars, depreciating with use. They eat resources rather than generate them. The psychological comfort of ownership must be challenged. True investments grow independently of sentiment. Homes require constant input. This reframe invites a stark realization. Are we investing or indulging a fantasy? The comfort narrative must be dismantled. The real estate as investment myth needs a rethink. The financial landscape is littered with biases. Our brains love tangible assets, even at the expense of better returns. This loyalty is costly. The idea that a home is the ultimate asset, it's a belief rooted in tradition, not fact. We need to recalibrate our financial GPS. Real estate isn't inherently bad, but it's rarely the investment powerhouse it's painted as. The brain clings to past narratives, yet the world has evolved. Today's wealth building requires diversified thinking, not all roads lead to real estate. The challenge is to question deeply and invest wisely. Let's redefine what true investment looks like. The journey begins by shattering myths. The verdict is simple. Reevaluate real estate's role in your portfolio. It's not about abandoning property altogether. It's about understanding its true place. A genuine investment portfolio thrives on diversity. Stocks, bonds, and yes, real estate, but in balanced proportions. Avoid the trap of emotional attachment. The brain loves comfort, but comfort doesn't pay dividends. The protocol is clear. Calculate, diversify, and question assumptions. Real estate should be a strategic move, not a life-consuming anchor. Recognize its limitations and potential. The real estate myth has been a long-standing titan. Time to dethrone it. It's critical to shift from buying to strategic investing. Let logic, not nostalgia, guide your financial decisions. One sharp protocol emerges. Treat homes as lifestyle choices, not investments. This reframing aligns expectations with reality. Homes cater to comfort, not cash flow. The brain's love for tangible assets must adapt to modern financial wisdom. A home doesn't become an investment by virtue of ownership. It needs to actively generate returns. Most properties don't meet this criterion. The reframe is crucial. Consider opportunity cost. Ask yourself, could this money grow better elsewhere? The intelligent investor questions every dollar spent. Homes are part of a lifestyle, not the cornerstone of wealth. This insight dismantles the fantasy of guaranteed property profit. The financial horizon widens as myths are cast aside. The future demands smarter, not just safer, decisions. The mic drop moment. Real wealth lies beyond the white picket fence. It's in assets that work hard while you sleep. Real estate. It snoozes unless strategically leveraged. The brain must embrace the uncomfortable truth. Investment means returns exceeding costs, not just owning. The comfort of property ownership is a siren's call, but the fiscal reality is harsher. Acknowledge the limitations of real estate. Recognize the opportunity cost of idle capital. The verdict is clear. Seek assets that appreciate without constant input. The mental shift is transformative. Transition from homebuyer to strategic investor. Real estate is a tool, not a panacea. The key is balance, not blind allegiance. The closing argument is simple: critical thinking over tradition. Real estate's allure is deep-rooted and overstated. The brain craves safety but must adapt to financial realities. Buying property isn't synonymous with investing. It's a choice that requires clarity and strategy. The smart investor evaluates every angle, every cost. The challenge is to see beyond the facade of ownership. Real investment means growth, not just possession. The mental pivot is essential for financial evolution. Real estate's pedestal needs a reality check. Questioning assumptions is the first step to intelligent investing. The protocol is clear: diversify, scrutinize, and move beyond the myth. Wealth creation demands more than just a roof over your head. The final note: break free from the real estate mirage. The path to financial independence isn't paved with mortgage payments. It's about strategic asset allocation. The brain's bias towards property needs recalibration. True investing is about growth, not comfort. Real estate should complement, not overshadow, a diversified portfolio. The key is understanding its role, not inflating its importance. The mental shift away from traditional thinking is vital. Real wealth requires more than brick and mortar illusions. Embrace diverse financial instruments for true prosperity. Real estate is a part of the puzzle, not the entire picture. This is the mic drop on the property myth. Elevate your financial acumen and step beyond the trap.